Let's start with a number you won't see on any balance sheet, but which dictates profitability for every single elite trader in the world: 73%. That's how much of their market time successful traders spend completely inactive. While the majority of amateur traders are constantly clicking, zooming, and panicking, the professionals are simply waiting. Today, we're going to uncover why this active, deliberate patience isn't just a nice to have virtue. It is your single, most vital path to consistent, long term profits. We're detailing the top 10 reasons why stilling your hands and quieting the noise is the only way to win this game. Reason 1: Trading demands quality, not quantity. The first barrier to success is tied directly to our primitive human nature. The retail trader is wired for immediate action, always chasing the latest blip on the screen. This primal urge for constant engagement, which helped our ancestors survive, is now the primary cause of account destruction. What distinguishes the high performing trader is the realization that markets reward surgical entry, not random, frenetic motion. The person glued to their screen, frantically reacting to every tick, feels productive, but they are statistically guaranteeing their own failure. True patience is understanding this unique professional paradox. The highest returning activity in trading is often no activity at all. Reason 2: Eliminate the frictional costs of overtrading. Impatience acts as a hidden corrosive tax on your portfolio. Every time you rush an entry, every FOMO driven trade, and every little violation of your rules accumulates into a systemic drag on your capital. Consider the math. An emotionally driven trader might engage in 20 low quality setups a week, exposing their portfolio to a substantial amount of total risk for minimal expected gain. Contrast this with the disciplined trader who identifies just 4 or 5 A grade opportunities, risking a smaller total percentage for genuinely superior returns. When you account for commissions, market slippage, the bid ask spread, and the emotional depletion from constant decision making, the overtrader is constantly paying a premium to lose. Reason 3: Patience is your pro level pre execution process. Many people mistake patience for passive laziness. In reality, the patience of a professional is an intensely active state of readiness. This means continuous focused preparation, dissecting the market environment, mapping key levels, recognizing structural shifts, and building a detailed plan, all before placing the order. Think of it less like waiting for a bus and more like a specialist sniper. The sniper spends hours immobile, doing continuous reconnaissance and calculating environmental variables, all for a single high impact moment. Active waiting involves tracking large institutional footprints, monitoring macroeconomic events, and analyzing patterns across various timeframes. The patient trader is never idle, they are fully loaded and prepared for optimal execution. Before we get to reason 4, if you are enjoying this video or have learned anything new, I would love it if you subscribed. It helps me more than you know. Okay, let's continue. Reason 4: The exponential power of selective trading. This is less about psychology and more about financial physics. The famous quote holds: "The market is a mechanism for transferring wealth from the impatient to the patient." Why? Because patient traders use strict entry filters, resulting in naturally higher win rates and dramatically lower drawdowns by avoiding marginal plays. Crucially, they conserve their cognitive resources for when it truly matters. Imagine two traders, both starting with $100,000. Trader A takes 300 mediocre trades a year with 52% accuracy. Trader B takes only 60 exceptional trades but hits a 68% accuracy rate with better risk reward. Trader B, despite trading 80% less frequently, will inevitably outpace Trader A while also reducing stress and time spent in front of the screen. Reason 5: Develop resistance to action addiction. You need to acknowledge that your trading platform is engineered to keep you active. Flashing charts, easy access buttons, and a relentless stream of data are specifically designed to trigger your impulsive, immediate reward response. Your first step toward freedom is recognizing this manipulation. Successful traders cultivate strategic tolerance for boredom. They view the quiet periods between valid opportunities as necessary, productive downtime, not as a wasted moment. This mental shift turns trading from a reactive, gambling like activity into a proactive, focused business operation. If you can handle the silence, you can resist the market's constant, programmed urge for action. Reason 6. Patience is synonymous with capital preservation. Professional market participation requires you to develop clear, objective criteria for every trade. This means specific technical confluences, confirmed support and resistance zones, clear trendline confirmation, volume analysis, and, always, a predefined minimum risk to reward ratio, typically 2 to 1 or higher. The essential rule here is simple. If your criteria aren't fully met, your action is zero. This isn't a missed chance, it is a successful act of capital preservation. By rigidly adhering to your preset rules and only engaging when market conditions, such as clear trending versus ranging phases, are perfectly aligned, patience guarantees your funds remain safe until a high probability move is guaranteed. Reason 7. Harnessing market structure with timed entries. A deep understanding of how markets actually move proves the value of waiting. The reality is that markets spend approximately 70% of their time in messy consolidation or range-bound price action. The explosive, profitable moves only occur during the other 30% of the time. Impatient traders exhaust their capital and mental energy during that 70% consolidation, leaving them depleted and unprepared for the real breakthroughs. Professionals wait for the phases of accumulation and distribution to complete. They wait for a clear directional signal before committing significant resources. They know that missing the first 10% of a move to ensure the direction is confirmed is vastly superior to jumping in early and getting whipsawed. Reason 8. Redefining productivity through inactivity. Your most profitable trading days will often have zero executed trades. This concept stands in direct conflict with how society teaches us to view productivity and reward. To internalize this, you must undergo a deep psychological re-engineering to celebrate the trades you avoid. To cement this change, replace outcome-based metrics with process-based metrics. Instead of fixating only on short-term P and L, which can often reward luck, focus on rules adherence percentage, setup selectivity ratio, average risk-reward per trade, and drawdown control. These metrics validate discipline and patience, making them the new benchmarks for success. Reason 9. Securing the market's high-conviction plays. The market occasionally offers what we call sweet spot setups. These are obvious, high-reward, low-risk opportunities. They are the compensation you receive for your periods of extended waiting. The ultimate tragedy is when a trader misses these clear opportunities because they've already bled their accounts or mentally exhausted themselves through constant, needless overtrading. Impatience leaves you bankrupt both financially and mentally. Patience, by contrast, ensures that when the market presents a crystal clear, high probability entry, the true reward for your discipline, you have the full capital, the razor sharp focus, and the unwavering conviction ready to take that perfect, high impact shot. Reason 10. Patience is your unbeatable human advantage. In a global environment dominated by high-frequency trading algorithms and microsecond execution, it's easy to feel like the individual trader has no conceivable edge. Yet, patience is the one critical differentiator that no technology can truly replicate. Algorithms process data faster, yes, but they cannot wait better than a human trader with genuine discipline. Your patience is your ultimate alpha. Your discipline is your competitive shield. The professional views trading as a multi-year, probability-based endeavor where process fidelity is everything. Your ability to remain composed and wait while the majority is panicking is your proven pathway to sustained profitability. Every single loss you avoid is money you've earned, making patience profitable rather than painful. In conclusion, if you take away just one central idea, let it be this. The patient trader recognizes that capital preservation is the foundation of profit. They dedicate their time to analysis and preparation, waiting for the optimal moment to strike. Embrace the waiting. Find satisfaction in the trades you walk away from. Your ability to sit still is your ultimate financial lifeline and your definitive path to becoming a consistently profitable trader. The market is always presenting opportunities. Your job is simply to wait for the ones that meet your standards.